This is Funded. When you subscribe, you learn how to turn knowledge into money. Most people remember the New Zealand dream as a postcard. Sun on the lawn, smoke from the barbecue, a house that felt like it would hold your entire life without complaint. These days, that postcard has yellowed. In 2025, we find ourselves in a quiet, almost embarrassing pause. Rates are falling. Economic growth is non-existent. The country is looking a little like the All Blacks after the 2023 final, staring at the scoreboard and wondering who to blame. Kelly Eckhold, chief economist at Westpac, is the Kiwi dream over?
Well, I mean, it hasn't been an easy year, has it? It's been a year of broken promises to some extent. I feel like I've broken a few myself because at the start of this year, we were promising people 2.5% growth, and we're looking like we're only going to get about 1.2%. The unemployment rate has drifted up, but I think we expected that all along. But I think that given where things are now, we have good reasons to believe that we can get a bit more of that dream back as we go through next year.
When you look at the country right now, what are the first signals that catch your eye? The ones that tell you the story before the numbers do?
Well, there's a couple of key factors that, are really driving the optimism. The interest rates, the OCR, cash rates, mortgage rates, these have actually gone down quite a long way now. I feel like I've been saying this for a while, but it's certainly true this time. But in any man's vernacular, that's a pretty low interest rate, and that's pushing mortgage rates down to, they're all below 4.5% for the major terms, probably getting down a bit closer to 4.25%, I would expect, once we go through the next few months. That's a pretty tasty interest rate for most New Zealanders. Now, you can start to see the signs that that's actually starting to flow through to the economy now.
People love to talk about the cost of living crisis. It has become a national chorus. CPI sits at 3%, yet almost half of the workforce has not seen a pay rise this year. Pay rises help push prices upward, yet they are not happening. How do you read that contradiction?
Yeah, on the wages side, it's actually still quite tough, as we should expect, given that unemployment rate is over 5%. The good news there, though, is that most of those wage measures are now sitting consistent with what you would expect inflation to settle at around 2%. So that's probably quite good for costs for businesses as we look forward the next sort of year. In terms of inflation itself, we've become confident that we're at a cyclical peak for the inflation rate. Now, it got to 3% when that third quarter data came out a few weeks ago, as we expected. And now looking forward, I think there seems to be a good basis for expecting that when we get towards the end of next year, it'll be closer to 2%. Don't think it's going below 2%, but a year where food prices and meat prices don't rise as much as they did, I think is going to feel a lot better for households, particularly when it's a year where there could actually be some sustained employment growth and eventually a falling unemployment rate.
Before we continue, most people treat their KiwiSaver like an old photo album. They never open it. If you want some free advice on how to pick the right fund provider and fund type for you, then book a call with Wealth HQ. There is a whole landscape of funds: default, conservative, moderate, balanced, socially responsible, growth, aggressive. Each one tells a different story about who you are and what future you expect to walk into. Are you into crypto? Do you want to avoid investments that support wars? Do you want some control over your money? Wealth HQ will help you take the guesswork out of things. Click the link below for more info. Kelly, 15 years ago, we were told we were living in a rockstar economy. Immigration even flipped, with Australians choosing to cross the water to us. Now the tide has turned again and more New Zealanders are walking away from home. With that in mind, could you walk us through what fuels your sense of optimism?
Yeah, well, it is a reflection of the relative labour market strength of the two countries. And it has been the case for a while that the Australian labour market has been quite a bit stronger than New Zealand's. Their unemployment rate is still under 4.5%, and as I said, ours is over 5%. Normally, the chips would be the other way around. We'd normally have a little bit lower of an unemployment rate compared to them. And, people have voted with their feet in the last year. And as a result, you've seen that outflow of New Zealanders over to Australia looking for better times, particularly in some of those industries like construction, where, it's been especially tough here. The thing I'll say about that, though, is those labour market trends are not leading indicators, but lagging indicators. So when the economy picks up, the labour market usually picks up sometime afterwards. And that's why, if we look at our forecast, we think we're going to get growth in the third quarter and the fourth quarter and the first couple of quarters of next year. But we don't think the unemployment rate's going to fall until the second quarter of next year, reflecting those usual lags. And I think by the time we get to then, depending on what's happening in that Australian economy, some of those migration trends might be starting to look a little bit different.
The end of 2025 feels like we're undercooked, and we have talked before about the quiet force that shapes behavior. This is confidence. When you step off a plane in Queensland, the warmth tricks you into believing that life is easier. I know this sounds shallow, Kelly, but when the weather lifts, people lift with it. How much does confidence really matter?
Yeah. So, unfortunately, the most recent consumer confidence data has been a bit disappointing because even though the Reserve Bank delivered that big easing back in October, we didn't get a big bounce in consumer confidence. But I think if we look at the GDP data, there is a lot of evidence for that. There does seem to be a sign that, at least in that data, the December quarters are looking like they tend to be relatively strong. So I think there will be some sort of potential for that. I certainly noticed the last couple of years we saw a lot of indicators perk up quite a lot through the sort of like November to February period. The tough period has really been through April through to about August in the last couple of years, where I think unfortunately firms have been a bit disappointed. They kind of went through the Christmas period. Things kind of looked like they were looking up. They were starting to feel a bit optimistic, but then the arse dropped out of the economy. In the sort of around March, April timeframe. And as a result, we kind of tended to go backwards in the middle of the year the last couple of years.
The numbers show that home ownership has stopped moving upward and rents keep climbing. What do you take from that moment in the story?
Yeah, I mean, the housing market's still generally quite flat. But actually in the rental market, look, if we look in the CPI, rent inflation, it continues, but it's continuing at very low levels. It's actually one of those factors that gives us confidence that the inflation rate as we go through the next year is heading back to 2%. And that has reflected, I think, that those population growth trends we're talking about, when people are leaving the country or leaving weaker areas of the country. Wellington, really good example of that. For example, they've had a drop in population in the last year. Then you've seen the rental pressure. It's less prominent if you look in some of the parts of the countries that are stronger. So, Canterbury, Otago, for example, Southland, you don't see those sort of quite negative trends. I think one of the good things here on the housing front is that affordability is improving. Because the nominal prices are not rising, the interest rates are going down. People are not getting wage rises, but they're not really getting wage cuts either. A lot of these things, particularly the lower interest rates, I think are really going to help support affordability as we go through the next 6 months. And a lot of the housing market commentary seems to emphasize the rising role that first home buyers are playing in the market.
And when you look ahead the next 3 to 6 months, you sound like a man who is choosing careful optimism. Explain what you see in the horizon.
I think cautiously optimistic is the right way to characterize it. Even though I'm talking about us expecting growth through the second half of this year when that data comes out in early next year, it's really looking like it's closer to the middle of next year before we see growth registering trend levels where, we're not only just staying still, but we're actually starting to move forward. So that's the kind of like view right now that, we've basically still got a few hard yards to run before we really start to go forward at a decent rate of knots.
Kelly Eckhold, Westpac Chief Economist, thank you. Before we go, most people treat their Kiwi saver the way they treat an old photo album. They know it exists, they know it matters, they never bother to open it. And that small act of neglect can cost them more than they realize. If you want clear, simple guidance on choosing the right provider and the right type of fund, you can talk to Wealth HQ without paying a cent. Maybe you like the thrill of crypto. Maybe you want nothing to do with investments that profit from conflict. Maybe you just want a sense of control over where your money goes. Wealth HQ strips the uncertainty out of the process. If you want to understand your options, the link below will take you there.